Hi, I'm Sharon Kreider with Western CPE. I'm in the Western CPE studio in Bozeman, Montana with urgent news for your tax planning with your business clients. This is really good news. I don't know if in the last several months of COVID-19 we've had any good news, but this is really good. So here's the question that came in on one of our webcasts, and then I'm going to update you on brand new legislation. My client received a $400,000 PPP loan in June 2020. She spent the entire $400,000 on payroll costs during the 24-week covered period. Is the forgiveness of the $400,000 loan taxable as cancellation of debt income? Now that's the number one question. And number two, and these are certainly coming in all of the time from our webcast viewers into our Uber question app with those websites. So the first is the forgiveness of the PPP loan taxable income? And the answer is no. That's specifically in the CARES Act, that it is not cancellation of debt income when there is forgiveness. Then the second question is, are the payroll costs paid by the $400,000 PPP loan proceeds, are those costs deductible? And first I'm going to tell you about Notice 2020-32. It's an IRS notice that said Section 265 of the Internal Revenue Code disallows any otherwise allowable deduction under any provision of the code for the amount of any eligible business expense to the extent the expense resulted in the forgiveness of the PPP loan. In other words, less complicated than what the IRS said in its notice, Section 265 says there's no deduction allowed for any amount allocable to one or more classes of income wholly exempt from taxes imposed by this subtitle. Oh, that still wasn't easy, was it? That's still more about the code section. So here's what goes on. I received money from the government in the PPP loan. I received the money, and I don't have to pay it back. And I used it to pay my business expenses, my eligible payroll costs and my eligible non-payroll costs. Now, I think the disallowance of the expenses is good tax law. It is about good tax law. I received free money, or if you want to consider it, somebody else paid my payroll for me in this particular question. All right, that's good tax law. I don't know that that's what Congress intended when they wrote the CARES Act in March 2020. Apparently, Congress didn't think that. And this is the news, and this is good news. Our tentative title is the Emergency Coronavirus Relief Act of 2020. You and I might call it CARES Act 2. That specifically says in the brand new law passed almost on the last possible minute in December. Well, it was passed because Speaker of the House Pelosi and Senator McConnell said that no one was going home for their vacation in Congress or for the holiday break unless a relief act was passed. So at the last possible second, our emergency bill says that no deduction shall be denied or reduced, no tax attribute shall be reduced, and no basis increase shall be denied by reason of the exclusion of the gross income provided by the CARES Act in the forgiveness of our PPP loan. In other words, if in our first viewer question, the business received $400,000 in a PPP loan, it was used all for payroll, just for simplicity's sake, was used all for payroll. So the loan is forgiven, and the payroll is still deductible. And if you think about that, what's good about that is it's really a way for the government to give some tax relief as a stimulus to the economy. Maybe you agree or don't agree that what the IRS first put out was good tax law, but now we're talking about something a little different. All of these businesses, or many of the businesses that received a PPP loan, really need help now. And to know on perhaps a $400,000 PPP loan and $400,000 of payroll that we weren't going to allow the business to deduct the payroll expense, and now the law allows that, means what? That's an additional $150,000 or $160,000 stimulus because the business doesn't have to pay tax on the amount that was forgiven. All right, a couple of other action items for you because of the new law. If the business has already received the notice, the SBA and lender notice of loan forgiveness, you probably put the forgiven loan, you took it out of the balance sheet as a liability, and you put it as reimbursement as a credit against the payroll debits. Pardon the debit-credit reference. You no longer need to reduce your payroll expense, in our example, by a reimbursement income amount. Instead, you could move the reimbursement income to an other income account and call it non-taxable reimbursements. If the loan has not yet been forgiven and is thus still on your balance sheet or on the client's balance sheet as a liability, when the forgiveness notice is received, just debit the liability and credit a non-taxable income account. That may be a 2021 journal entry because a forgiveness has been delayed for many of the small loans as the lender, the local banks, expected some changes to small loans where they wouldn't need as much in application or as much in documentation. So those are our action items. It's really good news for us, and that's us talking about our first question on the $400,000 PPP loan, that this is going to save in that example, our client some $150,000 of state and federal taxes, and that's another stimulus for them that maybe doesn't seem quite like the stimulus that, not like cash in the bank, but it is relief. So that's urgent news for your planning. If you are just now thinking about closing out the C corporations or closing out the planning for your LLCs and for your S corporations and your sole proprietors, this is good news for them on the PPP loan. So yes, finally some good news in COVID-19 pandemic days. Thank you. I'm Sharon Kreider at Western CPE.